3:02. Call meeting to order at 3:02. Recording in progress. Now we're there. First or item on the agenda is review and adopt agenda. Do we have anything that we want to change? Anyone? Um, Not seeing anyone raising their hand, I would entertain a motion to accept the agenda as written.
So moved.
I'll second it.
All right. All those in favor say aye.
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 Any public comment? Is there anyone from the public here? I don't see anyone. So we'll move to approve the board meeting minutes, March 17th, 2026.
So moved.
So moved. Second.
Okay, any discussion? I assume everyone's read them, looked at them. All those in favor say aye.
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 Opposed? Review and accept the financials for quarter one, January to March 2026. Chris?
Yes. So I'm going to try and share my screen if I can. I can bring them up. Well, it's not really behaving.
Maybe Bobby Joe can bring them up?
Here we go. I think that worked. Can you see them now?
Yes.
Okay. So,
Small.
basically
They're a little small for old eyes.
They're a little small. Yeah, can you make them bigger?
Okay. That better?
Much. Thank you.
So I'm going to bop over to the income statement here first. I am so excited to report a gain. It's like this is a momentous occasion for the last, I think, 3 years. I'm just going to take you right down to the bottom of this health column. You can see we're running a gain of $15 million. So this is amazing. Now, we always expect some gains in the first quarter because the cost sharing, the deductibles reset. So VEHI is not on the hook for some of those claims. It's on the member. However, the significant swing this year is much more significant than we've seen in past years. And it goes back to the GLP-1 decision we made. It goes back to the legislation that's gone through, the hospital budget guidance from the Green Mountain Care Board. All of these things we're finally seeing that we've been talking about for the last couple of years, it feels like. So as you can see, really a good place to be on the health program. If you look where we were at this time last year, we were at a $3 million loss, about 5 million before the investment activity. We're at a 13.6 million gain on the health program before investment activity, and then still positive. We did have negative market change in the first quarter, but year to date, we're still positive on investments, which is great considering the volatility in the market right now. So really happy with all of that. We did budget a loss for the dental program. So you can see we're at a loss of 556,000. We budgeted a loss of just under 1.3 million when we set the rates. So again, that is completely in line with expectations. We're starting, because of this positive trend, we're starting to see our cash balances coming back up, which is nice. So we're up to 65.5 million here as of the end of March. So that'll tie into our next conversation quite well when I talk about the early indications from the investment advisor that the board engaged. And, because it probably is time to start moving some money back over to Vanguard. But because we have this under review at this point, I don't want to, start changing things until we have a chance to make some decisions in that area before I start sending money back. The budget, we're in great shape. Not going to go line by line. Budget highlights are that we've raised 75% of our expected annual premium, which makes sense. We're 3/4 of the way through the year. We've spent 72% of expected annual claims and 60% of general operating expenses. So everything's in line here. Anyone have any questions on the financials?
Chris, if you haven't calculated, I was just curious, do you know what our net position is hanging at now?
I did not calculate our net position
that's fine.
ratio. Yeah, I'm not sure.
That's
I'm not
okay. I'd
sure.
rather have it right than a guess, so no worries.
Yeah, and it's hard to look at it now because with deductibles resetting, typically this is March 31st is a little more positive than June 30th would be.
Right.
But with all the changes, we really don't know.
Okay.
With the changes that we've made in the hospital budgets and the legislation, that may not be true this year, but historically, March 31st is one of our most positive looks at the financials. But this could be an anomaly year. So I don't like to calculate net position percentage on March 31st, only to have it erode by June 30th. So I tend not to even look at it. Any
Anything
other
else?
questions? All righty, and I
Not-
think we do usually get a motion on this one.
I'll just say I share in your enthusiasm. So thank you.
Yeah, yeah.
So do I. I concur with Mike.
Well, you can't really thank me. I just report the facts, but it is nice to be able to report something positive.
Sure.
So can we have a motion then to accept the financials?
So moved.
Second.
Any other discussion? All those in favor say aye.
Aye.
Opposed? We can move on to the review and approve the auditor engagement.
Okay, so investment advisor update wasn't really in the agenda as its own line item, but Bobby Joe and I talked about just kind of talking about it right now with the financials. It's not anything that you're going to be accepting or making any decisions on today. It's just more of a management update at this point. So basically back in December, we engaged Concord Advisory Group to look at our strategy, our vehicles, our investment policy, and they've come back with a report. I did not put the entire report in the packet. I want to kind of see where the board wants to move from here. I can certainly distribute it to the board after the meeting. I would like the board to take some time to think about this before we make any decisions. So that's why I didn't want to ask for any sort of action today. So I'm going to come down to this little chart. This is one page out of the packet that they sent. It's about a 33-page report. And this is the one key page out of it. What you're seeing here is our current allocations are in this column. So we have liquidity, which is basically our cash account, which is our revolving checking account at M&T, and that's where we pay claims out of. Then we have core capital, which is basically the bonds side of our investments. And then we have what they're calling return enhancement, which is the equity side of our investments. Below are some historical returns based on different ways to look at it. There's some footnotes here that talk about what all of these things mean, but they're basically industry sort of benchmarking to look at things, different ways to look at a portfolio. So it shows you, our expected returns, historical, long-term blend, CCM, 3 different ways to calculate it, fairly close, around just over 4%. Standard deviation, that's a statistical term. It basically is looking at how much variability they expect in this portfolio. And then the downside risk, which is less than 1%. So what that's saying is we have a pretty conservative approach here in our investing. We have always been very keyed into making sure that we protect our principal. And, we're not a company that's chasing investment revenue. We're about making sure that we are stable. So that's why I would expect to see a fairly low downside risk on here, less than 1%. They have 2 alternatives here. I'll say that alternative 2 right off, he doesn't even recommend. It was there for illustrative purposes, just to see, you can kind of see how the downside risk gains ground. There's more risk as you get more aggressive. Your potential returns go up, but your risk gets greater. And he like I said, alternative 2 was for illustrative purposes only. Alternative 1 is what we might be considering and what he might be proposing. Basically looking at our cash account, still leaving a certain amount, 27% in cash, because we need that to pay claims. That's our checking account. Proposing that we put some portion, 9.5% under this table, into a different Vanguard account. And what it does is it has a lot less volatility. It has the potential to earn maybe about a percentage more than our current Dreyfus account does, which is where our checking account sweeps to, as a money market. It's very, very safe short-term bonds. And there is some risk, but the risk is very, very minimal. And we might be able to pick up, he said, like 0.9% on that. So that's a possibility. Then you come down to our bond fund. He's proposing that because we have so much in liquidity up here, because we need so much cash flow, that we could go out further and look at a different bond fund that would have longer duration. Most of our bond fund now all matures within 5 years. So looking at a little bit longer duration, which gives you a little bit more enhancement in the portfolio, in the fund. And also some of those bring in mortgage bonds and some of these other bond markets, whereas the one we're in is mostly governmental and corporate bonds. So this would bring in some other bond categories. Again, looking at maybe, I think, maybe a little under 1%, but maybe around 1% that we could pick up there on the bond side. Then he basically designed a potential to expand our equity selection. So right now we're in the all broad-based U.S. market equity fund. It encompasses the entire market. So he's looking at taking that and putting it into different categories: large cap, small cap equity, some international, and some global. Now, we have to be a little careful around I-90 as to what we can do for global equities, because there are restrictions from the legislative side on this. So what this would mean if we went to this approach, bottom line, when you're looking at the historical, the potential gains, you're looking at, in total, by making all the changes, that we might earn somewhere from 150 to 255,000 annually on this 25 million portfolio. So you're not talking about a huge amount of money potential in the 150 to 250 gain. That is only, 200,000 is 0.05 or 1/20th of 1% annually. So it's not a lot of money. But what draws to my attention is our increase in downside potential risk. So you're going out and you're trying to get another potential 200,000 in gains, but your downside risk increases from 200 to 775,000 annually. So you are taking on a fair amount of extra risk for what I feel is a very small enhanced gain. The other thing that we would need to do in order to maintain this equities, I ran into this on the Visbit side. You get these recommendations, you benchmark everything, you say, okay, you find the funds, and then 3 to 5 years goes by and you have no idea if you're still in the right place or not. So the reality is if you want to go down this route with these additional funds, you really do need to hire an advisor. I would recommend Concord. And they're going to look at your portfolio on an ongoing basis, and it's going to cost 0.25%. So on a 25 million portfolio, that's about 63,000 a year. So, I mean, John and I talked about this, and John and I were both on the same page without even talking. We basically feel that it doesn't really make sense to go down this equity rabbit hole when the risk increases so significantly and the enhanced return potential is so small. It really doesn't feel like this makes a lot of sense. But we maybe would want to look at the other two sections and changing our bond strategy a touch and taking some of our cash and investing it into this other Vanguard fund so we could basically retrieve money to pay claims quickly without worrying about loss on a downturn market. So that's my overview. Take a breath. I know I said a lot. I've written a memo, which this is in. If anybody has any initial questions, happy to answer now. But like I said, I'm not looking for any decisions today.
Just a quick clarification. So it sounds to me like with the cost of the people that would have to basically supervise it, or I don't know, the term is escaping me right now, but it sounded
Yeah.
like $60,000 benefit.
Yeah.
Okay.
So it would cost us about 60,000.
But then you're only
That's
would
a
gain.
given.
Right,
And
but
then they're
120
saying that our potential gain is somewhere between 150 and 250.
Oh,
And
okay.
that's
Right.
before their fee. So that
Right,
really comes down to around
Yeah.
100
100.
to 200,000. But
Yeah.
we have this upside in risk potential where
Yeah.
they're saying we could lose $750,000 in a year, worst case
Right.
scenario, but that risk does exist.
All right. Thank you.
Sure.
Thank you for doing this, and I welcome you sending me the full report, and I do think it's worth us chewing on this and then putting it on to an agenda for a future meeting, maybe the next one. I'm interested in what you said in the memo, like instead of alternative one, you guys had an idea to shift some of the liquid assets. I think it's liquid assets. So I would love to see when we meet as a board, you put that forward in the same kind of format so we can see maybe it's like a alternative 0.5.
Yes, definitely.
Okay.
I'll ask him to work that. I'll say, we're interested in taking advantage of the liquidity and the core capital, but leave our equities alone. Let's see what that looks like.
Yeah, because I get what you're saying, and I also have investments which have a mix. I use equity, and like you said, my investment advisor and I rebalance when there's certain thresholds met, right?
Yes.
And so you do need someone to actively rebalance your investments. And I agree with you. Like the minus,
Yeah.
the downside is significantly more than the upside. So
It is. And the other thing is the other reason that it specific to VEHI, why we need that extra oversight when we go here is because of the restrictions around I-90. They will allow some equity investments and they have to meet certain criteria. And so for me to be able to evaluate and make sure that we're staying underneath that percentage threshold and that every investment meets that criteria within the fund. It's not just the fund. You have to look at all the underlying within the fund to make sure that they're okay. I would not feel comfortable taking on that responsibility. That would be something that would have to be managed externally to make sure that, because those funds trade in and out specific investments all the time within the fund. So that has to be monitored constantly to make sure that we're not in non-compliance with DFR. And that's a reason why, honestly, I have always said I take equities off the table, or global equities off the table when I think about it for VISBIT and for VEHI. For operating funds, it's like it's just not worth the risk of trying to go there, even to manage it. So, but I will distribute the entire report after the meeting, and I will make sure that that alternative is before us for the next meeting. We'll put it on the agenda. Any other initial thoughts or anything? And if you want, once you see the report, I don't think that this is a problem with open meeting law, for you to throw questions at me. I wouldn't answer them. I wouldn't answer them till the next board meeting. But if you wanted to reach out and say, hey, I'm interested in this, or I'd like to see this, or I'm more than happy to have that prepared for the next meeting for you. And he did say that he would attend a board meeting if that was something we were interested in having him do. So I'll just throw that out there. That's up to you. I can either just come back and present, or we could actually ask him to join the next meeting as well.
Our next meeting is in June,
Right.
June 16th.
Yeah. Do you think you'd like to have him come, or do you want to wait on that, or?
We'll look and see what we have here. We have a lot of contract approvals in our work plan. I don't know, what do folks think?
Is that a 3-hour meeting?
That is a 3-hour meeting.
I think if just on the basis of what I'm reading, I think if you guys want to, Chris, you want to recommend a 0.5 where you shift some stuff of the core and liquidity, and
Yeah.
and it's pretty straightforward. I don't need the Concord guy on.
I would agree. That was my thought.
Okay.
Okay.
Lisa's shaking her head.
Yeah, I agree.
Okay.
Yeah.
Okay.
All right.
Yeah, I know there's a lot of
anything-
work before the board, so we don't want to take time it's not needed. And the other thing is, after that meeting, if you decide you want to carry it over to another meeting and you want him to come at some point, he's happy to do so. That was part of our engagement to allow time for that. So that's something we can certainly do.
And you're always very thorough, Chris. So,
Well, thank you.
um,
So the last
so next,
thing,
oh,
because I jumped ahead of you, you already had introduced us to engaging the auditor.
yeah.
So the audit engagement letter is in your packet. It is the same engagement letter that you're used to looking at, the normal scope for our annual financial audit. I will say that the fees have gone up a little over $3,000, 8.2%. It kind of is what it is. You know, inflation is crazy. Accounts are almost impossible to find. They have to hire a lot of people from out of state. They've been apologetic about the fees going up what they have the last couple of years, but we don't have a lot of options. Johnson and Lambert is the firm to go with. You know, we try and find somebody else. They're the experts in insurance, in pooling. We get a great audit out of them. DFR is happy with them. So I kind of feel like it is what it is. But any questions on the engagement?
so we need a motion to approve it.
Yes.
I move that we approve the Johnson Lambert engagement.
I'll second it.
Any other discussion? All those in favor say aye.
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 Opposed? Okay. Can we move on to the executive session now? For the status of the contract, the contract update? Do we have a motion that someone can throw into the chat?
Yeah, I can do a motion pretty quick. I move that we enter executive session as per 1 VSA 313A to discuss contracts.
Somebody want to second that?
Second.
Okay, so let's move in. All those in favor say aye.
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 Let's move into executive session. Does Jeff needs to leave, right?
Yeah. Again,
We need to put him,
somebody can
camp
let
him
me
out
know
somewhere?
when you guys come back. That'd be great. I'll completely check out of the meeting.
Thanks, Jeff.
I move to leave executive session.
Second.
Second.
All those in favor say aye.
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 Opposed? All right, so we need a motion to, what do we need a motion for here?
Do we need a motion to
Do we need a
maintain
motion
our
to,
current?
I think because Optum is part of Blue Cross, it all falls under the one big contract we're supposed to bring it at the next meeting. Is the way I
Okay.
would interpret it.
Yeah.
Because we
Okay.
aren't entering a deal with Optum.
So
right,
maybe,
right, and we're approving all these contracts next month. It's on, it's in our work plan.
but maybe we should state for the record what we discuss or what we agreed to during executive session.
I agree.
So
So
who'd
something
like to do
along the
that?
lines of that we had an RFP for the pharmacy portion about breaking it out separately or staying where we are with our current contractor. And after looking at everything, the board has decided to remain with Optum, which is the carrier that Blue Cross contracts with.
Is there anything we need to say about the visitors thing?
No, we'll move to the visitors rating after.
Okay. So we can move to the setting the VEHI retiree calendar year 27 rates.
Okay, I don't know how much background you really want as far as what's built into the rates as far as trends and things like that. But the Visitors rate is coming in higher than the last couple of years. The Visitors pre-Medicare rate is in the 15 to 16% range. So these are folks who have retired early and are not, by early, I mean prior to being 65, they don't have Medicare yet. These are the plans that we had prior to 2018. So the original plans that have been in place since the 90s. So those are seeing a rate increase of ranging about 15.6 to 15.8. And then we do have, so that's about I think that's about 600 contracts. And then there's another 788 contracts that are Visitors 65. So those are folks who remained with us, even though we had the Medicare Advantage population, because they already had a individual Part D plan. So they couldn't have the individual Part D plan and the Medicare Advantage. So they ended up staying with us kind of at the last minute in January of 22. We had about, it says 788, but it's actually jumped to closer between 1,000 and 1,200, I think, because when they moved to Health Springs on January 1st, there was a bit of a network issue for some folks. So some of those people actually moved back into the VEHI fold. Those folks are looking at a 20.1% increase. Now it's a 20.1% increase on a $222 premium, so it's not as big dollars as it is for the other plans, but they're looking to go from 222 to 267. And again, it has that higher admin built into it. I can show you these rates as well.
So
These have been,
they stay on these plans until they turn 65, or they continue on them after.
They change at 65.
So at 65. So it's just
And they
kind
go
of
to Health
filling-
Spring at 65.
yeah, so
fills
it's interesting. So for someone that's 55 and they retire, they go from our current plans back to these old plans that they had prior to 2018. So they go back to the J plan, to the Vermont Health Partnership, or a comprehensive 300 plan. So they kind of go from our current plans back to our old style plans. And then when they turn 65, they can either do a Medicare Advantage plan, who's now through Health Springs, or they can keep it through Visters, through VEHI on a Vister 65 plan. And again, that's just a Medicare supplement plan. It doesn't have a Part D plan with it. So they go and purchase a Part D plan on their own. These, there's really not much to say about the rates. They kind of are what they are. We've gone over this with Visters. Visters has brought it to their board. And are moving forward, and they have their approval. So we just need VEHI board approval to file them this week or next week.
So I'm just curious, has this group been increasing or decreasing over time, or does it just stay the same?
Population wise?
Yeah, just in terms of the total
Yeah, I mean, because people retire and they, more people go in and then people age off. So it's kind of this rolling number, but it hasn't really gone up or down significantly for the folks under 65. So this is the pre-Medicare population. And then, there is actually closer to 8,000 retirees that are 65 or older, and we have about, 1/8 of them.
Mm-hmm.
And arguably, they're the sickest. They need the extra insurance.
Which group? All of them?
Yeah, I mean, the 65 plus who are still on the VEHI need more than just Blue Cross.
I mean, the beauty of the folks that are over 65 is Medicare is the primary payer. So Medicare's paying first. They're picking up about 80% overall, and we're picking up 20%, which is why the rate is on the lower side. That you could arguably say that the folks between 55 and 64, that's a higher risk group.
Oh yeah.
For sure. So, and those you can see if you look at those rates, the single premium, they're both going over $2,000 a month starting in 2027. All three plans.
And they don't legitimately have an alternative.
Other than the exchange.
Yeah, which is pretty much.
Yeah. But of course, their retirement plan is picking up a portion of this. So they're not, hopefully most of them are not paying this full board out of pocket. Mark could probably give us a better idea as far as what people actually pay according to their retirement agreement.
Not really.
I don't think that the retirement pays for it.
Which plan are we talking about again?
They're talking about the 54 or 55 to 64 or whatever, the quote unquote early retirement.
Yeah, so anybody in that population is going to be paying 20% of the premium.
Oh, okay.
Yeah. And then the state will subsidize the rest.
Gotcha.
And then there's the additional whatever out-of-pocket costs come with the particular plans. And anybody on the Vista 65, as Bobby Joe noted, they don't have a pharmacy benefit. So if they're with us on the Vista 65 supplement plan, they then have to go out and buy their own Part D plan.
Yeah.
There's no subsidization by either us or the state for that benefit.
So unless folks have other questions, we would entertain a motion to allow or authorize the management team to file these through Blue Cross of Vermont.
Just
So-
a point
so
of
is
order,
it
when
just-
you said these, do we have these, was this in the board packet?
I don't think I put the rates in there because they weren't final at that time. They were the ones that I was just sharing though, but I'm
Okay,
happy to share them again.
Yeah, so we want the rates in the motion, correct?
I
I think as long as they're in the minutes,
think
don't
we
know.
could say that on the average of 16.2.
let me try this. How about this, Lance? I moved that we accept the staff recommendation as displayed by Bobby Joe during our meeting with an average increase of 16.2%.
Or do we need Vistas in there?
We don't because
We
this
need-
is actually a VEHI plan.
Okay.
It's just it's a VEHI retiree plan, so I don't think it has to say
Got it.
visitors. Thank
All
you.
right. Can we get a second?
Second.
All right, Cheryl, all those or any more discussion? All those in favor say aye.
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 Opposed? All right, we'll move on to legislative updates. Right now, we are just about right on schedule. So we're looking good.
So
We're like a
I'll
minute
take this.
behind.
I'll take the first crack at this. I'll be quick. The big healthcare bill this year was S-190. Because of that S means it originated in the Senate, moved through that body quickly. It went to the House this month of May. It moved pretty quickly through the House Healthcare Committee. There was not a lot of testimony on it. And two things came out of that discussion at the House level. And the bill, I understand, will be on the House floor for a vote tomorrow. So the study committee proposal to create a public sector or study the viability of a public sector health authority, that proposal was removed from the bill. It was pretty clear from listening to the testimony that the committee didn't feel like it had the bandwidth or the time to take up that issue with any real seriousness. So that is gone from the bill for this year. The second important part of that bill was a discussion about reference-based pricing and whether the legislature would authorize the Green Mountain Care Board to use reference-based pricing for hospitals to lower the cost of care for the qualified health plans on the exchange and for school employees, thus for us. The original version of the bill at the House level contained numerical cost reduction targets for FY27, FY28, and FY29. In the interest of time, I won't go into those in any detail unless you want me to. By the time the bill came out of committee and it was amended, and Jeff, please correct me if I misspeak, it was amended, numerical cost targets were removed. And the bill simply says that the Green Mountain Care Board may, at its discretion, take action to lower costs for school employees and qualified health plans through its hospital budgeting process. And as you know from Act 68 last year, the board is authorized to use reference-based pricing as its primary benchmark to lower hospital costs. They're going to be setting rules this year and then implementing reference-based pricing for the entire commercial insurance market for FY28. We had assumed after Act 68 passed, that process would begin for FY27, but it's going to be put off for another year to FY28 so the board can set rules before it institutes price setting. However, S190 said if you want to take these incremental steps for the qualified health plans and for school employees, the Green Mountain Care Board has that discretion. So we'll be watching to see if that discretion is actually acted on, and if so, to what extent, and how it might benefit us with respect to our rate setting for FY27. The hospital budget cycle for Green Mountain Care Board will begin, I believe, in June or July. So we should know relatively soon where the board is headed in this, if it is going to act on that discretionary authority. There was a time when the bill said shall, but shall was turned to may. So good news is reference-based pricing is moving forward. The board may take a special look at us and the qualified exchange plans for some special discretionary actions. And S190 is up for a vote tomorrow. Any questions? All righty, thank you. I don't think there's anything else on the legislative front of note at the moment, at least for healthcare purposes. There's a lot of note, but not for healthcare.
Any comments or questions about that? All right, let's move on to review and accept the Vermont NEA quarterly report.
So moved.
Somebody second it?
Oh,
Second.
second.
All right. Any discussion on this? All those in favor say aye.
Aye. Oh, I'm sorry. I'm
Opposed?
sorry. One question. I noticed
go ahead.
that Mark, you said that you and Bobby Joe spoke to, I forget, was it the finance committee?
Senate Finance Committee in February.
Did we talk about this at our last meeting? Was there anything that came out of that, or you guys just like educating them?
We were essentially responding to their questions about VEHI, school employee healthcare costs, what we were doing to control those costs, how those costs were accrued with respect to price and utilization. I think there's a link. I believe I included a link
Yeah,
to our
yeah.
testimony. So that pretty much sums up what we spoke to. And then we just handled questions as they came up.
Okay.
It's actually something Bobby Joe and I are doing almost annually now for one committee or another.
Thank you. Thanks, Lance.
Anything else? All right, we do have the motion on the floor and it is seconded. So all those in favor say aye.
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 Opposed? Move on to review and approve the updated agenda protocol. Bobby Joe, you're going to bring that up so we can look at it?
While she's doing that, what Bobby Joe and I did is updated the protocol to match the current practice. So essentially, the way that it's documented in the proposed document is how we've been doing it the last, I don't even know how many more years I've been on the board, which is essentially the chair and the vice chair and the management team set the agenda, and it strips out some of the prescriptive stuff, like 2 weeks before we send a thing with all that kind of stuff is out, because I mean, up to this point, it's been any member can bring something up, and it comes to the agenda planning session that we do.
The track change piece, which is up, was really helpful.
Yeah, for sure.
So, any
Did
questions,
did anybody,
comments?
I mean, does anybody have any comments about this? Because, I mean, I assume that people looked at it. We can just, if we're all happy with it, we can just move to accept it.
I move to accept the agenda protocol as amended.
I'll second it.
Okay, is there any other discussion or question about this? All those in favor say aye.
Aye.
Opposed? Okay, so now we are at management team updates, the Silver CDHP.
So we engaged a different attorney. I think we let you know that last time. And we've since received feedback from them that they think that the members' responsibility is significantly lower than what we were initially told. So we were initially told that anything that people had received in HSA contributions for those years would have to be imputed as income, which would be somewhere between $4,000 anywhere up to $8,000. People definitely received 4,000 or 4,400, but then people also contributed. Some people contributed their own dollars as well. When they looked at it the second time, they thought the only people that really are on the hook for additional imputed income to be added to their W-2 are folks who actually hit and use the deductible between the 3,000 and the 3,200 that it was supposed to be, which significantly decreases not only the people impacted, but the amount impacted. So instead of people being on the hook for somewhere between $4,000 and $8,000 of additional income, now they're on the hook potentially for $200 to $400. So significantly less. It dropped it. We were worried that it could, get close to $1 million, between the amount that people had to pay and if they had to, pay to have, tax advice and an updated tax return. This brought it significantly down to less than $100,000, we think. So we feel a lot better about that. So we have letters that we can use. At this point, we're waiting for an updated outline of coverage from Blue Cross. And I just asked for a list of the people and the amounts that they received a benefit too early, basically. And we will have to ask the HR folks, the payroll folks, to update their W-2s for those years and submit those. So that's not fabulous. Requiring people to all get these updated W-2s, but the fact that it's significantly less than what we thought it was originally, we still think it's the lesser of the two evils. Mark, did I miss anything or forget anything on that? It is the gift that has kept going for many, many months.
And I need to say that Bobby Joe has been swimming in a sea of complexity that is headache inducing at best. And I just want to acknowledge a significant and difficult amount of work that she's been doing lately on this. I'm helping, but I'm really a pinch hitter. She's been really carrying a lot of this load, so I just want to acknowledge that. And the other moral of the story is, hey, if you got a Bobby Joe, you're lucky. Number two, always talk to somebody who knows something about the IRS when you're wading into these waters. That's been the other lesson learned.
Yeah, for sure. And the fact that we got this done pro bono is like the best part of it, for sure. Yeah.
That's great news.
So, yeah, it's great until it hits the business office, and then it won't be so great, unfortunately, because that is not a process that it's not something any of us do on a regular basis. I'd have to say in 18 years, I've never had to deal with redoing W-2s. So, or 19 years, I guess I'm done with. So that's not gonna be, that will be tricky in terms of how that plays out for folks.
They've also promised that they'll give us guidance for folks on doing that as far as the things to do with it. But it's also we're talking about, I think, 300 people total, and about a third of them are with one district. So I'm hoping that for some reason, this one particular district has a whole lot
Bunch
of
of 'em.
people in that group.
Well,
So
it must be one of our larger districts to begin with.
actually, it's not.
It's
I
not?
think it might
No?
be a poorer district is part of the issue,
Yeah,
and
it's
maybe
not
they
a large
chose the
district.
lesser. Yeah, maybe
Can
they
you
chose
say,
the. What's that?
who is it? Who is it?
I'd probably rather say offline.
Okay. All right. Yeah, so, well, they'll need help. Obviously,
I did
again,
push back on that as
yeah,
can we say they may receive or they could
right.
request one?
Because the
So-
challenge is even, with reissuing and then sending them out, or, if they're no longer employed, do you still have addresses? What if it comes back and the file goes to the IRS, that's the thing. With the file going to the IRS, it's like, all right, it
And I
kind
will,
of,
I will push back on that one more time just to, kind of push that envelope a little bit because I know it's not ideal for either for the district or for the person.
right.
I'd rather they requested it, but
Yeah.
I'll try that one more time. But when we finally get everything sorted and sent, hopefully we'll have clear guidance.
Yeah.
And
Oh,
I would assume too that that probably means the 941s have to be redone because the district will owe FICA match on this money that they didn't pay FICA tax on. I would assume. So yes, if we can provide any help on the district side to help them through this and guidance.
yeah. Right.
Yeah.
That's true, Chris. I mean, I hadn't thought about that either. So that's,
Yeah.
and so you got to revise the 941, even if it's exchanging $100, because then it's your files, they don't tie out.
Yeah, they're going, I mean, and it's unfortunate because it's going to be such small amounts. I mean, it could be,
Right.
$100 on a person that makes $50,000 is probably going to be, peanuts, maybe one peanut.
Right. And so we'll have to, the district will have to pay the additional FICA tax on the increased income. So those are all out of period adjustments that everybody's got to deal with, or whoever has to deal with. So it does have a little bit of a trickle into some other things that I
So
think.
Cheryl, if you have 3 people that this happened to in your district and they, it's to the tune of $1,000,
Right.
how
That's the
I get
thing.
it's a lot of work for nothing.
Right, it is. That's what I'm saying. And so I think there'll be a level of frustration there for these minor changes that require actually, it's minor amounts that require significant work in terms of revising reports that have been filed and all of that when districts aren't used to having to do those things. And there are probably plenty of people that have never had to send corrected W-2 files and corrected 941s and all of that. And so we'll be a bit kind of adrift in terms of processing all that because all of that gets processed electronically and
So I will, once I have more information, maybe I can talk to you specifically about what this looks like.
Yeah, we should,
You can help me
and there's a couple other people we might brainstorm with too on it that, to work on it. Okay, I can do that.
Thank you.
Bobby Joe, do you have any sense of a timeline on this at this point or?
I think it's going to take Blue Cross probably a week or two to get me the list because the so far all they've given me is de-identified claims information. This needs to be identified so I can say, Joe Smith, you got a benefit $150 too early, kind of thing. So I'm thinking it'll take a week or two for them to get that to me. I'm still waiting for a little bit of follow-up from the attorney. So I'm hoping within the next 3 weeks. I'm hoping by the next board meeting we'll be close to done, if not done.
Okay, good, good. Thank you.
Yeah, welcome.
Any other questions or comments about this?
And I'm happy to try to help with that too, Bobby Joe. Not only help figure out, how to help the districts that are impacted, but if you want me to help with messaging that kind of stuff.
I think that would be helpful because you're going to understand what they need more than I will. So,
okay.
Thank you.
All right, anything else? Let's move to the Benefit Design Committee and talk about a retreat.
We have really good news. Cheryl took a stab at revising the RFP. We spent considerable time as a committee talking about it. It has been submitted to our original 4 people. The only change on the timeline, which is on page 5 of the document, is that questions are due tomorrow. So the date was right as of May 20th, but the day of the week was Wednesday, and we got that cleared up. And we will expect proposals back from these individuals on June 8th. And if we believe we're happy with what we hear, we'll select some organization or group of people on June 30th. And I'm assuming that we will then present that to the board. If we get to the point where we are very unhappy with what we hear, or we are giving ourselves an option of saying, okay, we've got to go back. We've got to maybe issue this RFP to more people. But we're keeping our fingers crossed that this is going to work well. And the project start date is to be determined. I think it depends upon how the RFPs come back in terms of pricing and what parts of it we want people to do. And then obviously the completion date would be based on more work with the consultant that we actually ultimately select. And again, thank you to Cheryl for taking a stab at revising that.
Well, it's really Mark's draft. My format, Mark, and with a lot of work on Mark's part.
You compressed Mark's 500 pages into 8. That's quite an accomplishment. Well, thank you.
Right.
I may hire you permanently as my editor. Thank you.
Yeah.
Beth may hire you as my editor. So thank you.
Yeah. So it occurs to me, we'll need to bring the consultant to the board, right? And so what meeting are we targeting that for? We didn't really talk about that.
We have a meeting in August, but not July. Is that right?
I don't want to
I don't think we have
one in August either.
I think June is the last one we have scheduled.
Until October.
Yeah, October.
Whoa.
Wow.
Well, this might be something that we deal with in a retreat too.
Right.
That's true.
Right.
Yeah. Good point.
And we have the retreat, potential retreat is, we actually included that in this agenda item so that we could talk about that.
Yeah, I think it would have to go on because I don't know about everybody else, but I think waiting till October is just,
I agree.
That's not going to work.
Yeah, that's too long. And I wasn't sure. I was looking at the board plan, and I didn't know if that was last October or this coming October. So I was looking at that. So what about a retreat then?
Well,
Well-
I don't know. Are we done with this before we start talking to about the retreat?
Yeah, yeah, if you don't mind,
Oh, Mike, I'm sorry. I
yeah,
didn't see
that's
your
all right.
hand up.
I I just want to go through the order of things because to me, I thought a retreat would be we would be getting into really doing the work and looking at the plans and what we're trying to achieve and what the options are. And I would have thought the consultant would be helping us with that. So when we're
That's a
talking about
good
having a
point.
retreat, I would have thought that the consultant would be picked by then. So my thought is if you guys, we have a board meeting scheduled for June 16th.
Mhm.
If the committee feels like you're not going to be ready to make a recommendation by then, I would be open to having a special meeting in July. I don't know how much, whatever much time you guys need, having a special meeting to select a consultant on
Well,
board the
Mike, we have advertised that we're going to select a consultant with obviously an option to bail on June 30th.
so we could do it at the end of June, however much time you need. We select a consultant and then bring them on board, get them started, and then plan an agenda with the consultant helping guide us in our work.
Makes a lot of sense.
I mean, I don't know if you look at what we've asked the consultants to do in terms of the deliverables. I don't think they'll have any of that for us to work with or discuss with us. I mean, I'm assuming it's going to take them a while to do this work. I'm not sure what they would be honestly doing with us.
Uh,
And I mean, I think if we wanted to try to make the selection by June 16th, I would be willing to do that. I think it depends on how many proposals we get and what they look like and how long they take to go through and time availability for everybody. I mean, it's probably unlikely, but I suppose there's a possibility. I don't know.
So let's just say
Mark's hand
Oh,
is up.
I'm sorry.
Fine. I'm really intrigued by this idea of having the consultant at the retreat. Not so much to Cheryl's point that they're going to have work to share or report. Maybe they'll have something to share, but more to help us think conceptually and directionally about the future. Because so much of what we're talking about with benefit design involves thinking about the benefit plans, how services are delivered, et cetera. And so there's some interesting conceptual ideas out there and directional ideas that I think could be a fodder for discussion, really rich discussion. And having someone there to help facilitate that conversation and help us see what's going on in the bigger world would be really useful.
I have Suzanne and then Mike.
Well, my question for, I know we're doing a little committee work here, is conceptually, we're getting the submissions from up to 4 people or 4 organizations on Monday, June 8th. And that gives us just about a week before we have our board meeting. And my question would be, could our team meet on, let's say, the 11th or 12th after we had a little time to think about it? And do we want to bring a recommendation to the board on the 16th? And how does that square with everybody's opinion about what level of board activity you want to have in terms of the selection, the final selection? Because you could also say to us, and we might even say to you, we don't want any of these 4.
Mike?
I know that last time we had a retreat, it was during the summer, but I'm fine with doing a retreat when it makes sense. right? So for me, whatever the process is, whether it's, we hire the consultant, and from when we hire the consultant to when we've, produce the plans, right? That's a big timeline. What's the right point to have a retreat? I don't know, but I would rather have the dog wagging the tail and saying, let's have the retreat at the right time for the process rather than at this point in the calendar year.
Mm-hmm.
And if you were going to be trying to, make a recommendation and have us vote on this on the 16th, that would mean that it probably wouldn't, unless you were going to meet a couple weeks ahead of time. It probably wouldn't be in our board packet. It would be something you would be sending to us independent of the board packet, right?
That would be correct, unless we, as Mike had suggested, do a special board meeting after the 16th. But remember,
What about
it's
pushing?
not written in stone, but yes.
What about pushing the board meeting by 2 weeks?
Mm,
Yeah.
yeah. That could work.
Like to the 30th?
That's fiscal year end. So it's a little bit busy.
Yeah, that's a 3-hour meeting. I mean, that's, and that would be our regular meeting. If we were going to do a special meeting, we could make that just basically one item that we're just going to be, and it would be a lot shorter. But our June meeting is scheduled to be a 3-hour meeting.
Yeah. So we have all the contracts and everything to go over.
I mean, well, two things. One, what about the 23rd? Would extra week help? And the other thing is, who said we needed to do it on a Tuesday? I mean, Cheryl, I know it's quarter end, so you tell us where you're busy. Like, are you busy for that whole week?
It's fiscal year end.
Oh, it's fiscal.
It's
Okay.
fiscal year end. So everything's getting closed up and rolled over and scrubbed through and every other kind of thing.
July 7th?
Yeah, that stinks too.
Still?
Well, then as soon as we're done with that, we go on vacation. So
Yeah, I was going to say,
that's the problem.
23rd?
Actually, yeah. I'm just looking at my calendar here and seeing what all is going on. I mean, the 23rd is better than the 30th. I'm just still concerned what my fellow committee members feel about that. If that could work, I guess it depends on how many we get and how much information we have to go through, but it might, the 23rd honestly would be better. If we thought we could get through it.
We'll make it happen.
we can do it. It's going to be tight for all of us, and particularly for you, Cheryl, being a school employee right now. But I think we could shoot for that, and it wouldn't. Obviously, I don't know how long it's going to take. It could be easily a 2-hour meeting for us for
Right.
the 23rd.
You're
Right.
talking the 23rd of June?
Yes. How does the rest of the board feel about that? Yippity doo dah?
Yeah, the
The problem
23rd
is
is
that-
fine with me.
I have a Board of Civil Authorities meeting all day on the 23rd.
So for the committee, could we use the 16th, since we all had it on our calendars for our meeting, and then, on the 23rd, do the board meeting? That could work. That would work for me, since I have it on my calendar.
Lisa, did you just say you have a meeting on the 23rd all day?
Yeah, I have Board of Civil Authority.
Um,
Carol, were you talking about on the Oh, yeah.
That's the
23rd.
23rd.
I mean,
I mean,
I can do a day other than Tuesday. I just can't do Monday.
How does the 24th look for folks?
Fine,
both. Yeah.
Good? Oh my God.
fine for me.
Okay, write it down right now.
I
3
saw a
o'clock?
thumbs down. Hold on.
Oh,
I'm gone, but you can meet without me.
So we're saying 3 o'clock?
3 o'clock, 24th, be there, be square.
Wait, Jonathan, you said you're gone, but we can meet without you?
Correct. I am on a plane to Ecuador.
Ooh.
It's a lousy excuse.
Sorry.
We've been having trouble with the VEHI staff there. You have to send John.
Somebody has to go see the blue-footed boobies, so.
All right, so are we having the 16th going to be just the committee and then the 24th is going to be the full board?
That's the suggestion. I think it makes sense.
I think so. And
Ah,
that'll be the regularly scheduled 3-hour marathon meeting.
Yeah, Jonathan, if you could just review the board work plan to make sure there's nothing on there that they absolutely need you for.
I can take a look at it.
Okay.
And somebody will let Andy know, right?
Oh, right.
Good point.
Yeah.
so at the end of this meeting, I think Cheryl, Mark, myself, and Bobby Joe need to talk about how we're going to scramble prior to the 16th.
Mhm.
Can I make a suggestion that we go forward? This is plan A, right? That the committee meets on the 16th, the board meets on the 24th. If Andy can't make the 24th, plan B is we have the board meeting on the 16th, and then we do a special meeting at another time, half an hour, just to handle the consultant.
Or, you know, I can make the 30th work. I just gotta, you know, I can get things. I might be able to do a lot of my work on the 29th, and maybe on the 30th I'll have already rolled things, or maybe that's what I'll try to do so that I'm basically done on the 30th. If we, as a fallback. So,
So can I query you, Mike? What you just said, the meeting on the 16th is for everyone. No?
Meeting on the 16th for the committee. Meeting on the 24th. This is plan A. 16th,
Yeah.
the committee meets. 24th, the board meets.
And the board, okay. And
If Andrew can't do the 24th,
okay, now I understand that. But we still need to make a recommendation to the board. And you think we can roll that into the meeting on the 24th? You guys are okay with that? We'll make it work.
right?
and I guess what I was
that's why
saying
we're
is,
changing everything.
it's
Just so we can do that.
if the 24th really doesn't work, I would be willing to try to make the 30th work for me, you know, so that we get it done.
And again,
So
Cheryl,
that'll
then
be plan B.
were you saying the 30th for just the hour?
The board
Or
meeting,
for the full board meeting?
for the
Okay.
full board meeting.
But wait, Lisa can't make the 30th, right?
Yeah, I can.
No,
I can.
it was the
You can.
23rd.
Oh, okay.
23rd.
Thank you.
30th is the rule.
Okay.
All right. Is
Oh.
everyone all set with this plan that we have?
I hope Bobby Joe is, because she's the one writing it down.
Yeah.
Oh, AI is.
Oh, AI, right?
RAI friend.
Oh, boy. All right. Is there anything else with this that we need to discuss? Or are we all set? I mean, the retreat, when are we going to, do you want to figure out the retreat in June?
Yeah, why don't we do
I'd
that?
rather, honestly, I'd rather kind of look a little bit at dates just because, you know, if we're trying to do the summer's tricky, because everybody's here and there, or Otherwise, we're looking at the beginning of school starting, and school starts early this year. Um,
Well, if we want to have a consultant at our retreat, we have to think about their schedule as well. And they're not going to want to do it in July because if we just retain them,
maybe we just have to look at sometime in September, early
I kind of
September.
think so at the earliest.
Probably. I think you're right.
The meeting in October is the 19th or 20th, correct? It's the third Tuesday.
The 20th.
Yeah,
So
it is
that
the 20th.
that would be the 20th later in the month. So September, earlier in September would fit well, I think.
Yeah.
Yeah.
So sometime the week of the 14th or something.
That's a good week.
I mean, the sooner we kind of get a date, the better chance we have of everybody.
100%.
You want to try for Friday the 18th?
That would work for me.
That would work.
Sure.
I can make that work.
I'll do a calendar hold just to put it out there.
And that would be at Visbit at your offices. Yeah.
With snack.
At our summer chalet.
So this is
All
the
right, are we all
retreat,
set?
September 18th.
Friday
Yeah.
the
What
18th
time?
in September.
What time?
Okay.
Like 9,
9 o'clock.
10, 9,
I
9?
may have to do a little juggling. That's the Visbit audit week, but
Yeah.
I may get pulled out of the room a couple times. That's all.
Hopefully you're mostly done by Friday, right?
Yeah. They probably won't be in sight. We're not done for a while, but
Oh, right. Well, right. Done with the on-site.
yeah.
Are we all set with this now?
Oh,
The
I
Vermont-
wonder if that's when my audit hasn't even been scheduled. All right. Well, that's good to get it on the calendar because then I would just say I'm not available on Friday and they'll have to be done if they pick that week. All right.
And Bobby Joe, can you like just send us all of this as a reminder, like, at some point sooner rather than later, so we can all put everything in our calendars.
Yeah, I'm doing a placeholder right now.
Okay. So let's review the Vermont NEA service agreement. That's the last thing on our agenda, and we are actually right on time. So we're good to go.
Great.
So who wants to start with this? Is Jeff here?
Yes, he's at
I
the
don't-
bottom of my screen.
I'm here, Lance.
Oh, there he is right there. Okay.
Well, I can start. I have no problem with that. And I guess what I wanted to do was to start by clarifying what my concern was and what I was trying to suggest. And because I don't think it was what I was trying to say, I don't think it was, I must not have expressed it well. So my concern was was a reconciliation of dollars, not a reconciliation of time. And so that's what I was trying to convey is that with Visbit, there's a dollar true up in terms of what things actually cost. And what I had brought up was, why doesn't that happen with the NEA contract, why isn't there that same process with regard to the dollars? So I thought in order to possibly make myself clear that I would take a shot at a suggestion about putting into words what it was that I was talking about. So I took a shot at that. And if you want, I can share that on my screen. But that's what I was trying to express, was that in the contract, having some sort of language about truing up the dollars. And that was what I was concerned about. So I can share that, or we can talk about that. You want me to share what I put together?
Sure.
Okay.
Let's have a look at it.
All right. Let's see. Sorry. Let me see. Sorry, it's not. So it's not. All right. Talk for a few minutes because I've got to fool around with Zoom and sharing.
You want to just paste it into chat?
Yeah, I can
might
do
be
that
easier.
because it's not in a tab and it's not in a window. But so let me just do that. That might be the easiest thing to do. Okay.
I guess I have a question. And are you asking for like a time thing?
No, it's dollars. It's just a reconciliation of the dollars. I think what ends up happening with Visbit is the total, what the cost actually was, gets reconciled. So either the more or less, if VEHI, it gets reconciled. I don't know how the payments work. So whatever it actually ended up costing Visbit, the adjustment is made to VEHI. I'm assuming.
So-
Chris, you
so
can
what
help
ti-
me out here if I'm not expressing it well. And so I'm just looking
Yeah,
at
so throughout the
having that
year, basically
same
Visbit comes up
process.
with a budget. Visbit has this budget number. We divide by 4. We put it into 4 payments. Then after the Visbit audit is completed, it just put those numbers side by side. We
So what's the
estimated this is what we spent, and
so
any
what's the
money
supporting? I
goes
guess
back
I'm
or
not.
comes.
Yeah, I guess I'm just not clear about what you mean by supporting documentation in this context, since it's a person's work. I don't get it.
NEA, just like Visbit, just like any other organization, you have accounting records. And so it doesn't even have to be any formal accounting record. It can just be a very high level, this is this was the dollar amount that VEHI paid. The actual cost made up of, X
Paid
amount
for
of
what?
wages, benefits, and whatever came in at this, and this is the difference.
So
So
let me ask some leading
a
questions
very
then.
high level reconciliation kind of thing.
Let me ask some leading questions. So we know that we're paying 85% of Mark's salary and 20% of an admin, right? Is that correct?
Yes.
I don't know if it's 20% of the admin, but it's some
It's
percentage of the
85%
admin.
of Mark's salary and benefits and 20% of the admin assistance.
Okay.
Is there
Salary and
any
benefits.
other costs.
a small 20% of, no, 85% of Mark's estimated travel, which is $750, 80%, 85% of that is $638.
So my question is, besides salary, what are the costs that VEHI pays to NEA under this contract?
Just the travel and benefits. So like, for example, like something that I kind of pick up in my reconciliation sometimes on the salary line would be if I estimated that one of my wellness people was going to have a single health coverage for the year, but then they ended up getting married and adopted, have a child involved. So now they're going to have family plan health coverage. Well, that changes what my initial estimate would have been when I set the budget. So that gets reconciled through this true up process. That amount of total compensation might change for that wellness individual because they went from a single plan to a family plan, or vice versa, which I couldn't have known up front.
Right. And there's, when you're providing this estimate of the cost in advance, a couple months in advance of contracts being issued. I don't know if the administrative person, if that person works on hourly, you don't know for sure how many hours they're actually going to work. Maybe they're going to have overtime. I don't know. Maybe the rate that you use for your workers' comp or unemployment comes in different. Maybe, benefit utilization is somewhat different. I mean, there's actually lots of variables when you're talking about payroll and benefits. And so since, we're paying an estimate, I'm just saying that the estimate should be trued up to actual. And I'm just talking about the dollars should be trued up. I'm not talking about time or any of that. I just think if VEHI paid more than it cost the NEA for these things, that the money should come back to VEHI rather than staying with the NEA, and vice versa. I put it in there as well. If it costs the NEA more and VEHI didn't pay enough, wouldn't we want to also pay for that? I think that's only fair. So that's what I'm suggesting.
So you just used the word estimate. So your feeling is that we're paying Vermont NEA an estimate of what, like we're estimating how much we're paying Mark? Because if it's 85% of his salary, he has a salary that he's negotiated with Vermont NEA. I don't know where the word
Already?
estimate comes in.
Okay, so maybe it's firm, maybe because from my understanding was the NEA's fiscal year starts September 1st. So I guess it would be if they know right now for September 1st what all their wages and benefits are going to be. But even if you know a salary, if somebody works an hourly, you don't know for sure how many hours that person is going to work, and therefore how much that is going to cost. There's, utilization of benefits. There's rates that you use for, other payroll related costs. Even FICA can vary depending on if, an employee is making contributions to, 403B or 401k plans. So there's lots of variables. There's variable, like I said, just with FICA. You might think it's always 7.65, but it's not necessarily. And so that's just what I'm saying. You don't know for now, at this time, for sure, what it's actually going to cost. And I'm just saying.
I throw out there too, you don't always know that someone might not have a staffing change. Like, Mark, we assume Mark will be there all year. We assume, I guess, the administrative assistant, although we don't ever see this person, they could leave part year and someone new could be hired and they might have a different salary or benefit setup. So those are the kinds of things that my reconciliation for Visbit pick up.
My internet
Lance.
keeps cutting out.
Lance,
Yeah, go ahead.
can I ask a question? So thank you, Cheryl. I appreciate the clarity and the clarification, I should say, about this. Thanks for having me. First off, Jeff Hannon, Vermont NEA Executive Director. Nice to see folks here. I think I've met most of you, but not all. So hearing this, Bobby Joe, I guess, or Chris, I'm not sure who it was. When Visbit does their reconciliation, certainly you have greater numbers of employees, but their salary may change over the course of the year, I guess, it sounds like. And for our folks, they're part of a collective bargaining agreement, their pay is, and we're set for the next, don't quote me on this, next 3 years, Mark.
I think so.
Sounds about right. So our salaries are known. The only variable, as you pointed out, might be overtime for the admin folks, but they don't incur that cost doing VEHI work. I'm not aware of that happening. But certainly if there may be adjustments to health insurance, and those are known largely, but you're right, they adjust over time as they do. And I guess, Cheryl, there may be adjustments to FICA. Rarely see that, but you might be right.
Yeah, there are.
Yeah,
Can
yeah.
be.
And so there may be some other variables. Typically, I'll just say this, I'm going to guess that most of those variables trend in the upward direction.
Okay.
In other words, if we were to reconcile, my guess is that Vermont NEA would be on the short side and be asking VEHI for a greater payment based on a marginal amount, I'm guessing, frankly. And we have probably incurred that and just said, live with that within our means, if you will, and moved on. But if the request is for a reconciliation, I'm Mark, I'm going to step out on a limb and say, I guess we can have Mary do that on an annual basis. And just like you all do for Visbit, they take a look and then report back to VEHI. We spent more or less or this or that, however it goes. And I assume that's how it's done. Is that correct, Chris?
Yeah. And I think your biggest swing is really for staffing changes.
Yeah.
Like you don't know for sure that, I mean, Mark has a commitment to you, yes, but life happens. And so you don't really know for sure that something might not change. And I think it protects the NEA as well, for those over unders. I don't know. To me, this is just, I mean, I do reconciliations all the time. I'm an accountant. To me, it just makes sense. It doesn't seem like it's a big deal. We're just truing things up. I true things up all the time between the Visbit programs internally. You want to make sure that it's accurate. The way the contract's written, it's supposed to be actual costs. So we want to make sure it's fair, whether it's going up or down,
Right. And is that written into the Visbit VEHI contract too? That way?
Yes,
Is it written
is.
in? It is. Okay.
Maybe not these exact words, but it does talk in the contract somewhere about a true up. I don't have the language in front of me. But.
Got it. Okay. I'll take a look at that. I assume we have that, Mark, and so we can look at that.
I'm trying to raise my hand somewhere, but I can't find the stupid button. But just Chris, do the auditors ever asked for, like, they want receipts for a cheeseburger? Don't they want receipts from VEHI, from NEA?
Yes. Well, so our auditors look at our true up on the Visbit side. It has come up with Sullivan and Powers years ago about the Vermont NEA true up. I mean, I think they asked it once. I just said, we don't do it currently. They didn't push it. They just asked the question. Like I said, I do give them a copy of the true up that I do between Visbit and VEHI. That is some part of the work papers I provide every year to them.
So likewise, though, Vermont NEA's books are audited like Visbit's are, I assume. And you're not talking, Jonathan, about VEHI's, excuse me, books auditing Visbit, are you?
No, I'm talking about VEHI has an audit every year. So the auditors come in and look at what did VEHI spend money on, and they usually want receipts for everything.
Right. And does
So I do
VEHI's,
an audit for both companies because of my job. I'm contracted for the accounting for VEHI. So I have two separate audits I go through. So when they're there with their VEHI for their VEHI week in August, they want the true up documentation. So they're looking at all the VEHI contracts with all the different vendors, and they have asked before because it says it's actual. Well, how do you know it's actual? And I've given them the upfront stuff that Mary has provided. This is how I came up with the number. And at that point, they've never really pushed it, but they did ask. So,
Audits. You have a Visbit audit and you have a VEHI audit, I think.
yes, two
Versus
totally
two
separate audits, two
separate
totally
audits.
different weeks, two totally
Right.
separate engagements.
same,
Right.
same auditing company though, right?
They are the same firm, yes.
Yeah. We have a different CPA firm that does our auditing of our books. Likewise, they look at that and they look at what VEHI contributes towards Vermonier's budget and those sorts of things. Similar, but from the other end.
Right. And that's what when they're there for my Visbit audit, that's the role they're taking. When they're there for the VEHI audit, they take a different role, you know.
Mike, you have your hand up.
Thanks, Lance. I'm supportive of this conversation and Cheryl's ask, and Jeff, I appreciate your willingness to look at this. My concern about the existing service contract, I think, is more substantive.
Yeah, I think so.
And I appreciate the language that you proposed, Jeff, because I think that addresses more of the area of the contract. To me, a mismatch between what Mark has been doing and bringing to the table and what the contract says. And I think that's a much larger discussion. So, and we have 10 minutes left. So my proposal to the board and to you, Jeff, is that we have a separate discussion outside of the board meeting about the contract. And it can include, additionally, like the financial true up, the dollar true up that Cheryl is suggesting that we add, and also around the scope of services provided in the contract, and my concerns around, and Mark, you and I have had this conversation, right? What you do with the other 15% of your time, right? And how that affects your work for VEHI. And so my suggestion is that we have an offline conversation about the contract with appropriate people and bring it back to the board. We're scheduled to approve the contract in June at our June meeting. That's correct. Okay.
Yes.
So just generally is just curious about, Jeff, your thoughts about, and the board's thoughts about having that discussion outside of the board meeting and then bringing it back to our June meeting.
Is that for me? I'm sorry, or for your board colleagues?
Yes.
So I'm fine having it. I think you're right, Mike. I appreciate Cheryl's clarity as to her question. And I was going to come back to you, Mike, on yours, because as I watched that video last time, your question that you've raised right now it was very different and very clear that it wasn't a reconciliation issue. It was what the efforts Mark was putting towards VEHI question. And so that's what I tried to capture and tried to address in the proposed language change. So I'm certainly willing to have that conversation. And if that's before the 16th, I think all the better. I think we got to get this wrapped up. I think collectively we need to get these wrapped up.
Mike, I have a question. You just said what Mark does with the other 15% of his time and how it affects VEHI. Can you give me some context for that? Can you clarify that a little bit about like what he would be doing with the other 15% of his time would have an effect on VEHI? Because I'm a little unclear on that.
So there was something that happened. I don't remember when it was. I remember I was sitting in a hotel room and Mark had a discussion about something on the legislative side, and there was a challenging meeting, and I think I challenged you, Mark, about it, and it was around the code of conduct that we have for service providers, where and I'm just going off the top of my head, where there's a line in there about in the best interests of VEHI, and I challenged because I didn't know that whether what Mark had done as part of his healthcare reform legislative advocacy was aligned with VEHI strategy. And so that to me is the danger zone. And that's what I want to try and address in the contract so that I can be confident that Mark is following the services contract and can do the work for VEHI that he's contracted to do and do the work for NEA that he's being paid to do, and that there's no contractual or strategic overlap or conflict.
Okay, thank you.
Yeah,
Lisa, go ahead.
yeah, I guess I get back to the question of how anything Mark could possibly be doing that wouldn't be helpful to VEHI. All of his work is relevant in terms of trying to lower healthcare costs and improve availability of healthcare for our members. So I just don't see how there's a conflict here. I just don't understand how we can say that, any work that he does is in any way a thing but a benefit to VEHI.
Let's
So a couple comments. First off, I would suggest to the group that we stop using Mark as the name, because what we're really talking about here is a job description and a position. And so I'm going to defend Mark as my colleague here and say this is not about Mark Hage as a person. This is about a job description and a person and a position. So I don't know if you get where I'm going with that, but it really is a job description. You have to step away from it. I guess from my perspective, Lisa, like your question about what could be happening, and I don't know if Mark had any role in this, so I'm going to just say that up front. But here's an example. There was a piece of legislation that was being talked about this session, which would dissolve VEHI by creating a bigger pool. Okay? So I could see that as a representative of the Vermont NEA, that could become challenging as to what hat you're really wearing, because the pool may be viewed from the Vermont NEA's perspective, a bigger pool is a good thing. But really what that does is when you're contracted to support VEHI and work for VEHI, I don't think you can work to put VEHI out of business because you're being contracted by VEHI. So that's my thought. And I don't know if Mark had any role in that was inappropriate, and I don't want to put that out there, and that's not what I'm saying. I'm just trying to use that as an example that could create a conflict at the legislature when you're talking about a bill that would remove VEHI and put VEHI out of business.
Thank you for pointing out that it is a position and it's not just Mark. That I think that is an important thing to note. With that said, I think that one of the things that we have talked about, and I'm just going to repeat what I've said before, that anything where someone in that position would have to spend any amount of time documenting what they're doing, uh, the time they're spending on this, the time they're spending on that, I'm not going to be interested in that because I feel that that's a waste of time. I would rather have the person in that position doing the advocacy work, doing the work that we have assigned to them, doing the work that's in the agreement. And I'm not going to be interested in putting any kind of like timesheets or documentation into that service agreement. So I just want to throw that out there.
I don't think anybody has asked for that.
Yeah, I just I know we've talked about this before about
I've never.
what he's
asked.
doing and how we know what he's doing. That has been brought up. So where are we going to go from here with this?
So my suggestion is that it's the chair and the vice chair, so you and me, Lance, and Jeff, and Sue from the VSBA get on a call and start talking about this with the goal of having an update, maybe a proposal for the board for the June meeting.
What do folks think about that?
So, question for you, Mike, if I may. Why Sue?
There's a word for it.
Because Mike is the appointee of the VSBA and Lance is the appointee of the NEA. So those are the two
Yeah.
organizations that
Sure.
I would say balance. Let's use the word balance.
Right, and we're having a question, a conversation about the contract with Vermont EA and VEHI. We're not having a conversation about VSBA and VEHI, although maybe we should. Maybe this board should have that conversation. But
well, I'll be frank with you, Jeff. I liked a lot of your letter to us, and I was very uncomfortable with some of the language you used in that contract discussion about the VSBA. So I feel like I need some backing. I need some support in a sidebar conversation.
I'll entertain it, Mike. I'm not going to say yes or no, and here's why. Because there may be conversations in that Sue should and VSBA should not be privy to, perhaps. We're having a question and a conversation about the contractual relationship between Vermont EA and VEHI. And VSBA is a third party to that. Yes, you represent them, but your conflicts and ethical obligation are to VEHI, not to VSBA.
would John be a better, more appropriate?
You know what would be appropriate? I'm going to bring another man, the president of VEHI, but we don't have a president.
Right.
John sometimes puts on a hat that looks like a president's hat.
Yeah, just because of the things that we do as part of the contract, but you're correct. I work for Visbit.
So could be that. Could be John.
There's something in here, and I'm going to defer to Jeff ultimately on this, but there's a proposal before the board that Jeff put together about the contract. I don't see why Sue Siglowski should be party to that conversation. It's a one paragraph addition to the service agreement about my position's responsibilities. Period. If there's concerns about other aspects of Jeff's letter that you want to talk about, that's another matter. But as far as the service agreement goes, it's one paragraph that's up for discussion. That's it. And I don't see why Sue Siglowski needs to be a party to that conversation.
So who else would, Mike, go ahead.
Well,
And then
Chris raised her hand. I want to.
So I just want to
Okay,
say
did you
one
go
thing
first?
that
Okay.
goes at the front of our audit report that says VEHI is managed jointly by the VSBA and the Vermont NEA. Just want to throw that out there, and I'm not even going to draw any conclusion on that. Just maybe that's where you're thinking, Mike, here, that Sue is appropriate. Because I mean, basically it says VEHI is managed by the two organizations.
And so my response to you, Mark, is I'm interested in that language that Jeff put forward, but it doesn't address all of my concerns about the disparity between the contract and what's going on, what in reality of what's going on, and my concerns about that. So to me, the discussion is broader than just codifying the work that you're doing on behalf of VEHI, which I read as that paragraph.
I think I'm confused by your reference to reality.
So to me, my concern is when you advocate and on behalf of the NEA and the potential for that to not be in VEHI's best interest. And so when we're talking about political advocacy, that to me is why I think it's important to have the VSBA represented in this discussion.
I'm sorry, I don't get it. Like
Yeah,
I'm trying to think about what I've advocated for.
Yeah, and I
Whenever I'm
think
asked
that
to
now we are getting into, I think
Yeah.
what we're doing now is
All
we
right.
are getting into talking about Mark. We're not talking about the position anymore because we're talking about things that he has done.
Okay. Point
So
taken.
let's move to, you know, this group that we're trying to form here. And I can see where someone from VSBA being in a meeting where we're discussing a contract with Vermont NEA could be problematic. I mean, it just goes back to, you know, our negotiating, you know, because essentially we're going to be negotiating language that's going to be in this agreement. And it would feel to me like we would be proxies. I would be a proxy for Vermont NEA. You would be a proxy for VSBA in an agreement that doesn't really affect VSBA. I mean, it's not their service agreement. It's Vermont NEA's service agreement. So that's kind of how I feel about it. It's like you and I and Jeff could probably hash this out if it's going to need to go before the board anyway. It's not like we're going to cut some side deal and sign off on it. It has to come before this board. And we can see the scrutiny with which, you know, it's going to be analyzed. I mean, you know, this isn't going to be something that we're going to be able to just pull the wool over anybody's eyes here.
I guess I don't see it as clear cut as you, Lance, because it is an unusual arrangement where the two guiding organizations, one of them has a service contract with the organization, right?
Exactly. Yeah.
Both there are
It
two
is, but
service
this whole thing
contracts.
I mean, this whole situation is kind of you know, it's not usual, right? It's an unusual situation that we're in. The entire, you know, concept of VEHI, the way it operates and everything is just unusual. So
Lance, isn't there another contract too? Oh, he's frozen.
No,
I know
Oh.
Can you hear me? Because my internet's been kind of wonky here a little bit. So
So
We
my
can hear you.
question is, we have two contracts? One for Mark and one for Bobby Joe / the rest of her group because there's a large number of people that that I don't know who all are, Bobby Joe.
Yeah, one is with the NEA and one is with Visbit, not VSBA. So
Okay.
that's the difference. There's no.
Okay.
conflict
Thank you,
with
Jonathan.
VSBA.
So where are we at with this, Mike? Do you want to meet with Jeff and see what we can come up with?
Yeah, I'll do it.
Okay.
So you and me and Jeff.
Yeah.
Okay.
You want to play the scheduling game? It was fun watching the game a few minutes ago. It's never a fun game.
Why don't we, because it's 5:09, we're already 9 minutes over. Why don't we do that via email?
Got it.
So we can move along here. Do
Or
we have anything?
if Jeff wants, and Lance, if you guys just want to stay on after we're done and Bobby Joe can
Yeah,
stop the
that's
recording.
Was
That's
Suzanne, were
fine.
you going to stay on with your group?
Well, I think our group is meeting on the 16th.
Okay, so you're all set.
If everything goes well, we're meeting on the 16th, whether it's in
Okay.
person or Zooming or
Yeah,
probably a Zoom.
Yeah, you had just mentioned earlier about maybe staying on, but I think we went past that.
You
when we
guys helped me
all
out.
of a
You
sudden.
helped me with
Yeah.
my confusion.
Got it. So we'll stay on after. That's a good idea, Mike. Thank you. So do we have anything else that anyone wants to discuss here? If not, then I will take a motion to adjourn.
So moved.
I will second it.
Second.
All those in favor?
Aye.
Aye.
Thank you. Thank you all.
Thank
Good
you.
conversation.
Bye.
Thank you.
Stay
Thanks.
cool.
Yep.
Cheryl, never mind. Cheryl, you want to send over your language?